Have you read BlackRock's 2023 Investor Guide? I did. And this week, I am breaking down what's in it. I'm in a graph. So one key section focused on the way interest rates impact something called PE ratios in growth stocks, like the ones you'll find in the S&P 500. PE ratio stands for price to earnings ratio. It's something that can help tell us how fairly valued a security is, historically speaking. So all the little blue dots on this chart show us the PE ratios of the S&P 500 plotted against 10-year real interest rates over the last 12 years. As you can see, when rates are lower, even negative, PE multiples tend to be higher. In other words, prices tend to be higher. For context, the S&P 500's PE ratio is around 19 right now, which is cheaper than it was last year, but still not all that cheap by historical standards. And as such, the kind folks at BlackRock pointed out in the report that value equities, like those represented in the Russell 1000 value, think about this like the opposite of growth, which tend to represent things in the real economy as opposed to tech, are trading at the largest discount relative to the S&P 500 since 2001. In other words, value equities are actually cheap right now. We're covering the whole report with my guest, the head of investment strategy at iShares for BlackRock, this week on the podcast.